It's the Brian and Kendra Show with Brian Cook and Kendra Cox of Keller Williams Realty Elite.
I am Kendra Cox.
I'm Brian Cook.
Between the two of us, we have over 30 years of experience.
Sharing real estate tips and advice. Right here on Classic Hits 1073.
Hey, we're back. Hey, Jared.
What?
Do you want to buy a cougar?
That cougar, no. The wheel's falling off and it won't start. I'm out. I'm sorry, I'm out.
All right, so here we are. We are back. This is the Brian and Kendra Show. We have Jared with us today. Jared Moyer with Keller Williams Realty Elite.
That's me.
And I'm Kendra Cox with Keller Williams Realty Elite. And we are going to talk about what is a qualified buyer. So you're kind of new to this game. What have you had your license a month, 6 weeks?
Yeah, about a month, something like that.
But you already have like a couple listings. You've got a contract.
Yep.
You've got a couple of contracts.
Yeah, a couple of contracts. Those deals should go through pretty quick. Really excited about that, and just getting to work with people. You mentioned, like Anja being a new homeowner. I guess coming into this game and this profession, I should say. I call it a game too, because real estate is fun because it's relationships. It is, and that's what I was going to say. You start to develop all these relationships with people
definitely
that are so cool, and so me being the newbie, kind of. I get to talk to a lot of first-time home buyers, and I would say the majority of my last month I've spent talking to a lot of first-time home buyers, and this is going to hit right in the vein of a lot of questions they present, like, do I get pre-qualified? Do I get whatever?
So Brian loves first-time home buyers. That's his. I mean, if you ask him what's your favorite type, he'll say first-time home buyer. Mm-hmm. We both do because it is fun. It's very, very exciting. But there's a lot more education involved with a first-time home buyer.
There is.
Just like it is with a first-time agent.
Yes, just like first-time agent or a first-time cougar owner. Same thing.
I mean, really. Only if it's Brian's cougar. I think it's different if other people have the cougar first. Okay, so we're going to talk about what a qualified buyer is.
Right.
So first off, right off the bat, there's a difference between the terms pre-qualified and pre-approved.
Okay, so what is the difference? You tell me.
This is the part I was worried about with not having, because usually this is what I do. I prompt Brian, and you're going to make me do the work.
And we're both prompter. Yeah, you do the work.
Doggone it. Okay, so here's the thing. We use these terms interchangeably quite a bit, but they're really not the same.
Right.
So pre-qualified is kind of a softer version, saying that they have spoken to a lender and that they've kind of opened the door, but they haven't really done the work yet.
Right.
So they've kind of told the lender, hey, I make this much and I think my credit score is this, da-da-da-da-da. And the lender says, well, based on the information you've given me, it sounds like you should be able to qualify for a loan. A pre-approval is a much more secure, I don't know, I just lost my words and I'm sorry that you don't know how to fill them in yet. That's your job, is to put my vocabulary together.
It's much more of a secure...
It's like the real deal. It's saying, I've seen your credit.
Right.
I've pulled your credit and I have looked at your income and I know this and I know what your debts are. And so now, based on the information that I've seen, I can pre-qualify you.
Unless something should change, you are pre-qualified.
Right. So that would be a pre-approval. And a pre-approval is what we really want to see, even above and beyond the pre-qualify.
And you mentioned something there that's so important. And hopefully we get there. But know your score before you go in. And we're going to talk about how you can do that. Because when you talk about pre-qualified, the banks typically, you mentioned it, but the banks typically, or the lender, is not going to pull your credit. And by the way, you don't want everybody pulling your credit.
Exactly.
Because those are hits on your credit.
I want to talk about it briefly for a second, and then we'll try to hit on it again in a minute.
Okay.
Because I like what you're saying, and I love how you're going with that. You and I talked earlier in the office.
Right.
We both are, I use Credit Karma, you use Credit Karma.
Yes.
Right?
Yes.
So I've used Credit Karma for a long time. I didn't have a credit card in my name for a long time. And then whenever life happened, I was like, oh, I got to get my own Visa.
Right.
So
that's what Anja's saying. I got to get my own now.
Well, she did. No, that's exactly what she did. Because learning from my situation, I mean, I was like, okay, listen, I hate for you to get a credit card, but girl, you got to get yourself a credit card. Mm-hmm. And she actually had to get 2 so that she would have 3 lines of credit, her student loan, 2 credit cards. So like I had a credit card, but I didn't have like I had a department store credit card, and I had excellent credit. But whenever I was removed from the credit card with my ex-husband, my credit score dropped significantly. I only knew that because I know you just did the raised eyebrow. I know, me too. Like, for reals, me too. Scared the heck out of me. But I wouldn't have even known it had I not had Credit Karma. Because Credit Karma alerted me, hey, your score just dropped. I look at it. And isn't it ironic that it dropped because I lost that debt? Isn't that funny?
It is.
But you have to have debt to have a good credit score.
Right,
You have
right.
to pay
And
your
that's
debt
a whole
to have
nother...
good credit score. It's a different show.
That's like a whole different show. We were
It
talking about this,
is.
a whole different
It
show,
is.
because
It
there's
is.
a difference between, just teasing,
is.
like there's a difference
Right.
between no credit and bad credit.
There is.
Two animals
Right.
there.
There are.
Okay.
So, point being, Credit Karma.
You need to know
watch
your
yours.
score. Yes.
And you said on yours that you see things that hit yours that aren't you.
Well, for example, I get alerted, or I'll check in every couple of weeks, every month, and I saw my score drop drastically. 60 points. I can't remember.
Right.
Recall. And
That's what happens whenever you get off your husband's credit card deal.
Yeah. Anyway, it had stemmed back from a offer that I had taken out with a cellular provider, in which I'd taken their phone. They're like, hey, try our plan, try our phone. Everything's cool. You got 30 days, return it. No money. Won't cost you anything. Right? So I did it. I take it back to the store. And for a year, 2 years, 3 years, that would occasionally pop back on that I owed them for that iPhone. Was totally not true.
Isn't
But
that
if
crazy?
if I didn't check my credit report, I wouldn't have known that, and then you can dispute it. And there's
Right.
all kinds of things you can go through.
Right.
But ultimately, if I hadn't known that, the other things that I need to do in life, transactions, are affected by that.
Absolutely. So with Credit Karma, and there's other different programs too. That's just the one that you and I happen to have in common. And my credit card actually shows me every month as well now. The one that I ended up getting shows me every month my credit score as well. So I can just pay attention, know where I'm at. Those are not the credit score. That's not the
Right.
one that the bank is going to use. The bank is going to use TransUnion. What else? I always
Experian
thank you.
and
I was like Equinox. Nope, that's a vehicle. I know what I'm doing, dang it. I just don't know my words. That's awesome. Okay, so on that note,
Yes.
point being, we're talking about a soft score with Credit Union, or excuse me, with Credit Karma, versus your true, like a hard credit score with those other ones.
Right. And that's where we were talking about the fact that you don't want them pulling your...
I don't want to pull it with Experian every month.
So,
That would be bad.
So the three credit bureaus,
I was
Equifax,
so close with Equifax.
Experian, and TransUnion. And those are the three agencies that people that lend, if they're a participating member, they report those to those credit bureaus. And ultimately, they dish out a score. They say this person, his debt is here, and his history of payment is here, so this is basically a score. It all changes. But what we're saying is, you need to know your score, and you don't have to have a bank pull your credit to know that score. You can sign up for the free stuff. Is he getting in the
I
mix?
have a question.
I think
Okay.
Branson's like over there thinking. I could
I get
smell
all
it.
excited about credit. I check mine way too much.
That's awesome.
But for those that don't know, does checking your credit hurt it?
Yes, thank you for asking that. That's exactly what you're trying to say. Is whenever you go to the bank, whenever you go to buy a car, whenever I apply for a credit card. So you go to Stage. I know we don't have a Stage anymore, but this is how much I shop, you guys.
Right.
So whenever you go to Stage,
A lot of
and
your
they
department
say,
stores
right,
offer
so
their own
department store
credit cards.
says, "Hey, do you want 10% off if you apply for this credit card? We'll give you 10% off." Every time you do that, it's a hit on your credit.
Right.
And so yes, that's an excellent question.
But if you check it, there
Like
is
checking it
no
on
hit.
Credit Karma. There's
right,
No.
Credit Karma doesn't hurt me.
And
I can look at it every day.
freecreditreport.com, once a year you can pull your own credit and have your report. So no, if you
Yes.
do it personally, no. If they do it, there's a little bit of difference between a hard hit and a soft hit and all those things. But it does matter. When the other people pull it, yes, it will affect your score.
Thank you for asking that.
Yeah, it's an awesome question.
welcome.
So back to what we were saying. No, we kind of got off there, but
We didn't. It's exactly part of it. It's like the last thing
I
on my
agree.
list. It says
yeah, I agree.
that's how you know if you're. I mean, that's one of the ways to identify if you're going to be a qualified buyer is how much you know about what you have.
Right.
So you do need to be paying attention to that, and it's exciting. So over watching my daughter for the past couple of years, she's probably been looking for about a year and a half. Literally every month she sends me a screenshot of her Credit Karma and goes, "Mom, look, Mom, look, Mom, look." So whenever she applied for the first credit card, she sends up, "Mom, look."
Right.
And then the next month, Mom, look, Mom, look.
Right.
And it was really fun, even with her. So her first line of credit was her student loans. So she watched it build, drop whenever she got that credit card, increased again, drop when she got the second credit card, increased again. So
Right.
yes, you can see that and observe it and know where you stand and if you're going to be eligible or not.
And we're not promoting credit cards. I
No,
hear
but-
some parents in the background screaming.
What we're not promoting is abusing a credit
Right,
card.
right, exactly.
Unfortunately, I really don't know how you survive without one.
There is,
And I don't mean using it. I
right.
mean
there's
renting a room.
there's a neat little thing that you can do as a parent as your child approaches that age that they may be needing to start build credit, 18, 21 years of age. One of the coolest things that you can do, if you have good credit, you have a credit card, you can add them as an authorized user, not give them a card, and immediately your credit and your history is going to pull onto them and help them out.
Okay, so I have always thought that as well. I'd heard that might have changed. And I didn't end up doing that with Anya. My credit is excellent. And
Right.
I ended up not doing that with Anya because she's a turd. She goes, I don't want your credit score. I want my own credit score.
Right.
Legit, that's what she said. But Brian argued with me about that. So I'm gonna let you talk to the boss about that.
Okay.
Maybe I misunderstood him. I mean, that's happened once. All right. So anyway, moving on.
Yes, moving on. So anyways, pre-qualified, pre-approved. Pre-approved is more serious.
Brian just commented, and he
Let us know.
says they changed that. You can't inherit parents' credit anymore.
Oh,
hey,
then.
boss, did you see me? Absolutely, 100% listened and quoted you.
Wow.
Bonus.
Okay, so we'll move on.
Okay, we're back.
We are back.
We are back, and we are going to talk about. This is my favorite one that we're going to talk about.
You said down payment.
I did. I said.
And all I think about is money. Money.
Well, that's typically what the down payment is, but okay. All
So
right,
do you have to have a lot of money?
Okay, so here's the thing. This is why, and I sent this to you earlier in the week, and I'm like bolding it in all caps and like wrong. So this article that I had found, it said that to find a qualified buyer, that you find someone that has a down payment and their closing cost, and that is just not necessarily true in our area.
Right.
So, like I just talked about with the USDA loan, that's a 100% loan. That, depending on your credit and depending on your, your finances. What am I
Right.
trying to say? Your income. This is based on your income. So, depending on that, you might very well be able to get a 100% loan. You can ask the seller to pay up to 6% of your purchase price and closing cost.
Mm-hmm.
A lot of our USDA buyers walk away with $500. I kid you not, because they pay their earnest money, they pay for a home inspection, they pay for the appraisal. They do those things out of pocket at the beginning. And then we go through the whole process of buying the property. We go to closing, we have the seller's credit on the statement, and our buyers are walking out of closing with money, which seems so weird.
That sounds awesome.
But it's how it works.
Right.
And it's awesome if you don't have money saved, but you're absolutely capable to make all of your mortgage payments and your insurance and all of these things, and you've got the credit worthiness, then this is an amazing loan. I absolutely love it. And interest rate is almost always less than like with a conventional loan, where you would have to have a down payment and pay most or all of your closing costs.
Right. Is this a good time to talk about private mortgage insurance?
Nope, not yet.
Not yet? Okay.
All right, so let's talk about a different loan type.
Okay.
I want to talk about FHA now.
Okay.
What is the down payment for an FHA loan?
FHA loan, 3.5% to 20%.
Yes. So this is a fun thing about FHA. We always promote them because they are a lower down payment loan again, so only 3.5%. That is so much easier to come up with. And again,
Than
seller
the typical 20.
Than a typical 20%, which is what everyone thinks when you say, "Do you want to buy a house?" It seems like every buyer immediately goes, "Can't, I don't have 20% down. I don't have closing costs," and it's terrifying.
Right.
So FHA loans only 3.5%. You can have the seller pay up to 6% of your purchase price again in your closing cost. Makes it a much more affordable loan. But so I was talking to a guy earlier this week. He has a really sizable down payment, but if he wanted to do FHA instead and get that lower interest rate than a conventional loan, he can still do an FHA loan and just put more money down. It's not that he has to have only a 3.5% down
Right.
payment. He can do a 10% down payment and have that superior interest rate.
Right. Credit score. What kind of credit score to qualify
Okay,
for that?
so I tried to kind of double check this, but there's some varying information.
And from the lending perspective, this changes. We
It
saw
does,
this change
absolutely.
with COVID. You saw
Right.
lenders tighten things up. Maybe particular houses they no longer will loan on. Otherwise, they up their credit score. You've got to be a 680, kind of
Right.
tightened up the belt.
They did, absolutely they did. So it seems like generally we're seeing with FHA loans that we want to see you in the, I'm going to go with the 580. This paper says 500, and that's with the 10% down. I don't want to ever, I've never seen it happen, so I'm not going to say it.
Right.
So around a 580 or above. And also don't forget you really want to ask your lender. I am not your lender. I don't really know.
Right.
This is Google talking, you guys. So USDA loans 640, and conventional loans, some conventional loans can be obtained with maybe a 620.
Right.
So, but again, check with your lender. But the really important part is just knowing what you have. It's knowing what your credit score is, or
Right.
your soft credit score based off Credit Karma. So what I tell people is, you call Connie and you say, "Hey Connie, Credit Karma says my credit score is 750,
Right.
and my income is, and my debts are,"
Right.
and let her tell you what she
And
thinks
be
she
honest
can
about
do.
all that.
Yes,
Don't
be upfront.
don't hide stuff. Right.
Definitely.
I had a short stint in the banking, so a lot of this, you try to help people, but you also,
You can't help me if I don't tell you the truth.
well, I mean, the whole thing is to
Weird.
look out for the client.
Yes.
That's the whole thing. Don't put them in a bad situation
Right.
that they can't afford. And so there's a few numbers, real quick, if you're cool. I wanted to go over the debt ratio real quick.
Yes,
just
real quick,
just a
let's
couple
do.
things.
Yes.
Like VA, it's a little bit higher, but not much, as far as the principal, interest, taxes, and the PITI, what we call
Right.
TITI, 29% on a VA loan. And folks, really, if you're looking at your overall debt picture, you need to add up and see where you're at. But we should be under roughly a 43% debt ratio, which means debt to income.
Awesome. Thank you so much. Can you believe it's already time?
I can't believe it. Where did it go?
I don't know. We'll see you guys next week at the Brian and Kendra Show.